Well, another strong night's trading and another all-time high for US share markets. Good morning and thank you for joining us for Moo Moo's The Daily. I'm Michael McCarthy, CEO at Moo Moo Australia and New Zealand. And for the first time ever, we saw the S&P 500 trade above the 6,500 mark in overnight trading. And that buoyancy was directly related to some data that was released overnight, and in particular, the GDP growth numbers for the quarter, which suggests that the US economy continues to expand at a rapid rate of around 3.3%. And that growth was a surprise. Market estimates were much closer to the 3 or 3.1 level. And so to see the US economy, despite all the known economic challenges at the moment, growing at a faster rate than expected, fed into the enthusiasm that share market investors have been showing across the board to give us another all-time high. It wasn't all positives, however. We did hear from NVIDIA, and there are mixed reports about its earnings report for the quarter. Many analysts pleased to see it beat the numbers that they were estimating. However, its very cautious outlook means it's actually fallen slightly in post-market trading, down almost 1%. Now, that position may be reversed as more analysts and more investors get a chance to run their eye over the results. But at this stage, it does look like a slightly negative reaction due to a cautious outlook from NVIDIA. Having said that, at $180 a share, it's still near the all-time high, around that $184.50 mark. And so NVIDIA shares remain buoyant despite what might be a cautious reaction to its result. In Australia, we also saw some very strong reactions. Qantas up 9% after basically shooting the lights out. And remembering that Qantas was trading at all-time highs before that, it was quite an extraordinary result, and it had a halo effect across the sector, dragging Virgin shares higher. More on Virgin in a moment. Coles also had another good day, up 2.8% and continuing its outperformance against Woolworths. And it does appear that the relative game here has been won by Coles, at least for this half year, because with Coles reporting an expansion in both sales and profitability, the contrast with Woolworths couldn't be starker, where earnings fell by 17%, and that going backwards in terms of both their earnings and the revenue underlying it, Woolworths shares have come under extreme pressure. And the share market reactions to Coles and Woolies illustrate the big difference in the two reports we saw this week. Coles shares initially went up 8% in response to their announcement. Woolworths shares fell 13%. And since then, we've just seen further pressure on Woolworths and more support for Coles, as we mentioned, going ahead again yesterday. And it does appear at this stage as if investors will lean towards the better performance that we're seeing in Coles. Also saw a report from South 32. Its shares fell more than 7% in trading. No surprises here. We know that the resource sectors broadly have been under pressure because of lower commodity prices. That was certainly illustrated by South 32's report. However, it was made worse by a blowout in costs in their alumina production, and that coming at a time of lower commodity prices added to concerns. Ramsay Health also disappointed, down more than 10% after reporting what some analysts saw as a poor half-year result. But we've come to the end tonight of the US reporting season, and overall we're seeing some justification for the gains that we're seeing across the board in US trading. Now, over the last 3 months, the S&P 500 is up 9.5%. And with 489 of the 500 companies reported so far, we can tell that overall the average growth in sales has been around 6%. And the average growth across all of those companies that have reported around 12%. And that certainly does justify positive momentum in share prices. That is a surprise. The growth, particularly in revenues, was much higher than expected. And that so much of it fell through to the bottom line was a bonus for investors. And so good results overall for the US reporting season. Best performers, of course, we saw very strong reports and good share price performances from tech stocks and from finance stocks. That was very well flagged ahead of this earnings season. Perhaps less well flagged was the big pickup in communication stocks, where revenues grew by 44%. And that big turnaround means that there has been some bargain hunting in those communication stocks, and one that might continue given that strong catch-up that they've played. So we've seen generally stronger reporting in the US than we have in Australia, and a lot of it has to do with the composition of the Australian share market. I mentioned a moment ago that resource stocks have been under pressure because of falling commodity prices, and whether you're looking at iron ore prices or oil prices, that pressure is evident, and the reporting season overall likely to be less buoyant in Australia because of our weighting towards those resource stocks. But more to come. A very busy week for Australian earnings this week so far. And plenty more to come next week. Virgin reported this morning up 28% earnings, up 28%, a very strong result and in line with what we heard from Qantas earlier in the week. Virgin shares did jump 6% on the back of the Qantas result. So how they'll respond to this better result, given that they're already pricing in some good news, will be a very interesting aspect of it today. But I note a number of analysts have moved to a buy rating on the stock. Their fare increase has been lower than Qantas or Jetstar, offering them perhaps a more competitive position. And I suspect more investors will be looking at Virgin over the coming days as this result becomes publicised. A big report tonight to round out the season in the US is Alibaba. The e-commerce giant will be reporting tonight. Its stock's up 38% year to date, but it is coming back from much lower levels, currently consolidating around $120 a share. Alibaba has traded as high as 320, so nowhere near the all-time highs here. Now, there are very modest expectations here. Earnings per share are expected to fall around 13%. So any positive surprises, given that reduced share price and a very low PE ratio around 13 to 14 times, we could see a positive reaction if there's any good news released by Alibaba with its results tonight. Another strong performer in overnight trading was Snowflake, the cloud platform service provider. Its shares were up 20% after it showed its AI database product was subject to increasing demand from customers, and its share prices are up 54% year to date. The result overnight confirming that optimism that investors have expressed in boosting its share price. Analysts continue to revise upward their estimates for this stock, and with more than $1 billion in revenue dropping through to the bottom line, we've got plenty of good reasons for investors to be running the ruler over Snowflake after its result. Expect a further volatility tonight. We do have a very important read coming out tonight in the US. It's the inflation component of the national accounts. Now, the estimated read so far suggests that we're going to get a fairly benign read on the core inflation number at around 2.8%, slightly down from the previous reading of 2.9%. If there's any surprise on that number, we could see a significant reaction in the market. Anything less will lead to speculation for rate cuts, and we could see the market hit a new all-time high in trading tonight if that's the case. If, however, the number is higher than expected, that could bring quite a sour note to trading. We might see some corrective action in US markets tonight and over the coming trading week as markets digest the implications of a higher than expected inflation read.